Good morning, traders. This is Michael coming to you from Game Edge on Friday, October 31st, end of the month, TGIF, obviously Halloween. So everybody have a great day and weekend also. But if you're joining us this morning, we'll cover the three pillars here at Game Edge, as always, sentiment, structure, and trend. We had some extensive posts yesterday on X showing our tools in action throughout the day. The main tool we were watching, obviously, was the market trend model, which we're showing on the screen here. It's based on the tick index. We have blog posts and education about this at gameedge.us also, so you can check that out. Main takeaway is tick index basically is buying versus selling in the overall market. What we want to look for is this bolded white line. That's your instantaneous or intraday cumulative tick or CT. And then we add some moving averages on. If we're below these moving averages and then you're trending down on the bolded white CT, there's more selling occurring in the overall market. And then up here, we have a filtered cumulative tick indicator. We always like to watch this. This is plus 1,000, minus 1,000. These are larger block orders by institutions and larger market participants. Obviously, we've had 2 days of significant selling. This was a post-FOMC decision, obviously significant selling. And as I discussed yesterday morning, we were seeing weakness within the overall market trend model. And usually it's not a one-day event if you're going to have significant selling via institutions. And then we started piling that on again into the afternoon yesterday. And there were some other factors and tools we covered in the pre-market prep yesterday, which I posted last night. That was going to be difficult to have price appreciation due to the structure and some other factors. So make sure you check that out. So anyway, quick takeaway is we're weak within the market trend model. Even though we're bouncing this morning, we're bounced right up towards 6890, 6900 area, which is where we failed yesterday. So we'll watch that. And another key point or fly in the ointment yesterday, new highs versus new lows. New lows were outpacing new highs. And that's been significant days since we've seen that. So definite selling yesterday within the overall market. Moving on to the tick RC, this is how we base our mechanical portfolios. If we're in a positive slope on the colored ribbon, the mechanical portfolios are turned on and we're entering positions that are being triggered via our scanners within our Discord. But we've lost that trigger today once the colored, the bolded white line moves below one of these colored ribbon moving averages. That puts it in a negative slope. So then we turn our mechanical portfolios off. So again, even with the bounce this morning, this is going to need to recover pretty quickly and significantly. As I discussed yesterday, we're at an inflection point with the cumulative tick with the possibility to move to the downside and intersect or undercut the overall colored ribbon. If we continue to the downside and emerge outside the colored ribbon, then most likely we'll see more weakness within the overall market historically. And then that starts turning this colored ribbon to negative slopes. Again, that may be difficult to recover, but we're still at an inflection point here on the tick RC. The tick US is already under these, so we'll see if we can recover these. If not, we'd anticipate more selling and more weakness in the overall market. All right, moving on, the SPX, largest, most notional options complex. This is why we look at it. We separate the SPXA from the SPXP. SPXA, obviously institutions. These are our tankers or cruise ships. We're still call dominated, so really no change there. You do see a little bit of change from yesterday in the net delta column. You do see some out of the money puts hedging starting to come in, and these in the money puts being overran or taken off the overall complex. Obviously, this is November expiry, so these contracts don't turn over as much. So this is most likely out of the money put hedging. Just slightly, but even though we're still call dominated, you see the transitions are extremely wide here. So these are important areas and inflection points within the overall structure that we need to stay above for bulls to maintain their overall sentiment. Obviously, 6,900 to the upside. We've seen that tested multiple times within the past few days. So that will be that first level that we need to get over. So really no change here. We're still call dominated. Net GEX is still deeply positive. Just a little bit of spattering of erosion of the in the money calls below us as of now. All right, moving on to the SPXP. Again, this is call dominated, above and below spot price. Key takeaway here is this is all expiries turned on. Key takeaway here is the net GEX is within the range of the noise measurement. So we could easily flip this to negative depending on where spot price moves within the overall structure. And if we capture more negative deltas as well as gamma, and this could turn this put dominated. So as of now, the implied open was 68.70, but we ran all the way up to 68.90. Excuse me. And that was the top of the transition area. You'll notice the transitions are extremely wide. So again, this leads to choppiness and uncertainty for market participants and positioning. So as you notice with in the overall transition area, you do see puts as well as calls just spattered. So again, previously this net delta column was completely green above and below spot price. And as we've been watching our tools, delta balance and GEX ratio mainly, we've seen the erosion of the upside out of the money call speculation, and then the appearance of the in the money puts above us, as well as out of the money put hedging. So again, that's changing the structure and degrading the structure, not allowing for significant price appreciation. So again, we'll watch these key areas as we head into the day. Again, if you're within the overall transition area, it can be extremely choppy. 6,900 to the upsides, that stalling or hurdle level that we need to get above. All right, let's move on. The SPXP GEX ratio. We covered this extensively yesterday. We have a blog post about this that I also posted within X that you may want to take a look at and read over the weekend at your leisure. But the quick takeaway is this is a ratio of short dated call gamma versus short dated put gamma. So we call this an improved put call ratio because we add a time component, which is gamma. And yesterday it was at 1.5, and I talked about the decreasing slope, negative slope, with the SPXP trending sideways. That was a negative divergence, and it was going to resolve one of two ways. One way would be the SPXP would start to drop in price, which we saw yesterday, and then the GEX ratio resultantly would continue down, which would indicate out of the money call or out of the money put hedging, and then in money puts coming in, as well as the out of the money call speculation continuing to degrade. So we covered that yesterday, and again the negative slope now. So we're slightly above that one level. You'll notice the GEX ratio is 1.03 as indicated up here. So just above the one level, but the one level is that balance point between calls and puts and bullish and bearish. So we're at an inflection point there also. So you'll notice that theme across all of our tools, as well as the SPX option structure. So staying above one will give a slight edge to the bulls. That would be a very slight edge. This could easily go below one, and then we'd be in an overall bearish state and could become put dominated. Again, we want to see, if you're a bull, you want to see this start to turn back to the upside. And depending on if this is just the overall sine wave, have the market cycle of the ebbs and flows, or is this going to morph into something a little bit more weaker, where we see a significant put dominated structure start to appear. So we'll continue to watch this, but we spoke about this yesterday. We were cautionary heading into yesterday with the tools and the position that we're seeing, and then it came to fruition yesterday. So again, we don't try to predict the future. We look at what is presented to us each and every morning. We don't try to torture the data to produce any outcome or any scenario or thesis. We just look at the data and we interpret it, and then we make our overall trading plan. And yesterday was a cautionary trading plan. It was going to be difficult to move to the upside. And then obviously we got the resultant pullback in the SPX towards the end of the day. All right, moving on to delta balance. Again, we discussed this yesterday. Quick orientation, the green dotted line is the out of the money call speculation. The red dotted line, sorry, that's above spot price. That's the right-hand plane. So it's your out of the money call speculation as well as in the money puts above spot price. The red dotted line is your in the money calls and out of the money puts below spot price. And then the aggregate is the blue dotted line. We spoke about this yesterday. We had a negative slope in the green line, which is the right-hand plane, which is above spot price. That's your out of the money call speculation, was starting to decline fairly significantly. We were barely above the zero line, but we're saying the upside speculation was not there for price appreciation. And obviously that's what happened yesterday. Now, the in the money calls below us, we're still being supportive, but we're starting to see a decline in that also, as you see this red dotted line start to get a negative slope and dropping. So again, as I talked about, the out of the money put hedging is starting to come in a little bit. In the money calls below us, either through monetization or expiry, are starting to dissolve away a little bit. And then our aggregate delta balance is now starting to drop from this +1 level where it was pegged to now it's starting to drop a little bit. So again, weakness continues to show within our overall tools. Now, projected on out in time, we see the 3rd of November, obviously Monday, significant drop in the overall structure, obviously end of the month. So where that overall money gets positioned heading into November, as well as the resulting Q4 here, is really going to be important. So we do see a recovery back up, but it's just very choppy back and forth with what we're seeing in the positioning now. So what The data presents on Monday will probably be a different picture, and that will be the end of the month flows, and then what happens with Monday, Tuesday, and Wednesday next week, positioning into early parts of the month for the November expiry. So we'll revisit this and see if the structure has changed and where market participants are positioning for the end or for the November expiry. But quick takeaway is that the tools continue to show weakness and declining upside speculation. All right, our net stack command. So the quick orientation for this, we've had some questions about this, so I want to make this as easy as possible for everybody. This is basically just an overall snapshot in time of where market participants are positioning. The easiest way to look at this is these are the highest sensitivity levels. We could call them the goalposts, but high sensitivity levels of the market structure. So you notice that in the money calls below is 6,000. That's way below where spot price is at the moment, right? So this is just the overall net stack command and where it's looking at the forced spot price. So again, this will change intraday as we begin to run, but we have significant in the money calls below us all the way down towards 6,000. We know that. So again, those should be supportive as we pull back unless we see a change in sentiment and structure. Upside 7,000. This is obviously the highest sensitivity level for today. In the money puts, that's way above where our spot price is at the moment. So what we want to do is after the first few minutes after the open, net stack command will rerun and we'll get the spot price positioning. Everything will be recalculated, and then we'll have new sensitivity levels for our members. Quick takeaway on charm though is 68.50. These are out of the money puts. These will continue to decay throughout the day as time ticks on. As long as we're above this level, these will continue to be supportive. That's the bottom of our transition area as well as our DS area. So we would anticipate those to be supportive unless we see a significant change in the intraday call put speculation, which is our vol M tool. To the upside, 6,900. We already spoke about that. 6,890, 6,900. That area out of the money calls here. If we're below 6,900 as time ticks on, charm, these out of the money calls will continue to decline or degrade, and these will continue to be a headwind unless we get above 6,900. So it'd have to be a large out of the money call speculation from bulls to really get above these levels that we've laid out. And then gamma, obviously high sensitivity level. This can add fuel to the fire. Positive deltas if you're above 6,900. You see the left-hand plane integral is fairly low, so this is really probably not going to contribute that much if we move through that level. And then the Vanna, obviously volatility. We see the right-hand plane is a little bit larger than the left-hand plane. Not significant though. So again, if we do see volatility drop and we see out of the money call speculation above 6,900, then this could provide a little bit of tailwind and then result in if we're below 6,850 out of the money puts, if volatility continues to increase, then that will continue to push us to the downside. So that's the quick takeaway on the net stack command. All right, moving on to the SPXP 0DT structure for today. Drunken Sailor range matches the GEX and DEX transition today. So the line in the sand for us for the bulls is 68.55, 68.50 at the least. You have to stay above this to stay in a more positive gamma call dominated structure. We are put dominated though, as you can see, significant in the money puts overhead. Now, as we drive this price higher, these puts that were in the money are now going to be out of the money. So again, moneyness matters. So depending on what these market participants or holders do at the open will probably drive some price action. If we're in the overall transition area, extremely choppy today, and then below transition area would be more weakness to the overall downside. As I said, 68.50, top of Drunken Sailor range, as well as P-Trans and INGEX and DEX transition. So matches that net stack command that I talked about, a key level for today. So put that on your radar. All right, we'll jump over to the trading view chart and we'll look at the pre-market price action. I already talked about 68.90. I'd actually draw a box from 68.90 to 6,900 would be my my level for today. I draw this box here, and these levels are going to act like sponges as we test those. You have price discovery as we push up towards those 68.90 and 6,900 level, and we'll be watching the market trend model as well as the intraday call and put speculation to see if we can overcome that. And then if we chop back down to 68.50. Then again, that would be that key level we need to hold. And then we could be trapped between the 68.90 and 68.50 today and just chop around as we head into the month end. So then likely not significant areas to play overall for the day. So, all right, let's jump into sorry about that. GameEdge.us education. You can sign up, newsletters here, and then our blog posts as well as our free courses, GameEdge Fast Pass. Make sure you check those out, and then pricing. Make sure you check that out also. And you can go to our Discord and join us. 14-day free trial. All the tools turned on. So, all right, let's get to the Amazon. Sorry about that. Give me 1 second. All right, give me 1 second. I got to pause. All right, everybody. Sorry about that. I got to jump off here. We'll look at Amazon real quick and then ADP. So Amazon call dominated above and below spot price, above transition. Everything looks good. Structure looks good also. PGEX, COI 255 and 250. So everything looks good. And then ADP, it is within our overall filter, but you can see the structure really is not conducive to dealer control. So I would not be looking at our web app tool for positioning. So, all right, thanks everybody. Sorry for about that quick ending here. I got to run and do a few things. Everybody make it a great day. Like and subscribe on X and YouTube. You'll be notified when we go live with content. Again, thanks for the interactions this week. It's been great. Community continues to grow. And everybody make it a great weekend. Be safe and manage risk as always. Thanks, everybody. Goodbye.